Hey everybody, this is Dr. Tom Carr, aka Dr. Stoxx of drstoxx.com, DRSTOXX.com. And if you want to join me and a great group of amazing people who are all trying to make money from the markets together, you can go to the drstoxx.com website. We've been in business every market day since October of 2002, if you can believe it, serving over 20,000 clients all around the world. Go to the subscribe button, scroll down to live trading room, and if you want to add on our new live options room where we only do long calls and puts, nothing fancy for the most part, every now and then a spread, but not much. You can join the option room at a 40% discount. All right, so we've got our hands full with this market because as you can see, this is the S&P 500 right here. And we are in a pretty significant pullback off of the all-time highs that hit back in late October. Now, there are several good things about this particular pullback that lead me to believe that it is a intermediate term bottom, or the intermediate term bottom has been put in, and we should, from here for the next couple 2 to 3 4 weeks, we should see some at least modest upside. Now there's going to be a lot of overhead resistance, so when we start moving up off of the current levels, you're going to get people that bought up in here. When a price gets anywhere near their price, they're going to start selling, dumping shares, dump. And that's going to slow things down and probably make our uptrend a little choppier than usual. It's not going to look like this for the most part, right? This started from above the 21 period moving average. We're starting now from below the 50 period moving average. Those moving averages are going to be resistance. These areas of support in here are going to act as resistance. And look at this heavy volume. That was a lot of folks who were buying the dip or selling, right? Hopefully most of that is selling pressure, because when everybody has already sold and has gotten to cash and has gone short, there's nobody left to sell anymore, and the market can only go in one direction. But I'm telling you, just from experience, when we start getting back up, and we should on this next move, we should start getting back up into this area up here, 6750, we'll call it. You're going to see it's going to kind of get stuck there. And then we chop around for a few days, and then maybe we get a little bit of a dip, and then we punch back up through it, and we get to the next level and do the whole thing all over again. So that's where we're at. Now, what are we doing today? We've got an inside day bar today after a gap down open. It was actually up most of the, I'm sorry, I take this back. This is the futures contract, which is overnight data as well. We actually did open a little bit higher than yesterday's close. We sold off for the first 10, 15 minutes. And then we had this really nice move all the way up to test the highs of yesterday's range. That's where we stalled out, rolled right back down again, closed the opening gap, muddled around down there at the bottom for a little while. Now we're starting slowly to ease back up off the bottom. Now, here's the thing. The market just got some news, and I would have assumed this was bad news, and it would have caused the market to go down even further. The news is that there will be no jobs data coming out tomorrow morning before the bell. We will get NVIDIA's earnings tonight, but the jobs data, the unemployment rate, and all that goes with that from October has been postponed again. So because the government shut down, we didn't get it at the end of the last month. We're not getting it tomorrow as they had promised. Something about they couldn't get a key point of data clear enough or something, I'm not sure. And it's going to be pushed off until December. And in December, we're going to get kind of a big pool of data, both from October and November. That's what they're saying. Now, I would have thought that the market would be very worried about that because it's uncertainty, it's unclarity, and maybe they're hiding really bad numbers from us because they don't want them to come out. Those kinds of things, I would have thought would have caused the market to collapse. In addition to that, we saw the odds for a December rate cut, because now the numbers aren't going to come out until after the FOMC meeting. We saw the numbers for a December rate cut go down. They were up about 50% yesterday. They're down to about 25 or 30% now. That's not good either, because the market wants to see the interest rates go down and liquidity go up. So given that that's not good news, it just came out a little bit ago, the market's kind of holding up. I mean, it's not doing great right now, but it's not falling either, and we're still above the open. So uh, that's a good sign. That's a good sign that a lot of the worry and fear about A, jobs data, B, rate cuts, C, potential recession, that a lot of those fears have already been baked in. And yesterday we saw the fear and greed index hit 9, single digit, which you don't usually see up here, just a couple percentage points off the all-time highs. Right? So there's a lot of fear out there, a lot of fear, and because of that, you've got a lot of folks on the sidelines. Had a lot of selling over the last couple of weeks. All these big red bars here, not a good thing, right? Those are people leaving the market, not entering the market. And but here's a good thing about when you're thinking in a contrarian sort of way. When you have these very, very negative sentiment readings, a lot of fear and a lot of people getting very skittish about the market, very skeptical about the market. They're not in the market when they're thinking that way, right? They're in cash, or they're in bonds, or they're in some safe havens. There aren't many safe havens out there, by the way. you know, Even like Target and Walmart and so on are not doing all that well. Um, but because they're on the sidelines, they are no longer in the market to influence the supply and demand, and therefore things should start from about this point on, should start to kind of settle down a little bit. All right, that's just Dow theory, right? Pure market theory, supply and demand. And of course, if we get a horrible showing from NVIDIA tonight, and if we get Trump tweeting about 500% tariffs on China, or we get some sort of a weird regulation that cuts China out of the chip market, which is kind of what everybody's been threatening, we could see another leg lower. But those are unexpected things, and I don't think NVIDIA is going to miss, and I don't think Trump's going to do anything to hurt the market any further than it's already been. All right. Now, a couple of good things about this technically. So we have an ABC pullback. ABC pullback, always good. When you see a straight drop down, that usually means there's another leg coming. We had the drop down, then we had the little relief rally, which we played really nicely because that was one of our best weeks. This was the week before last. And we had 3 really big days that made back for all the losses that we had in the previous 2 weeks on the slide. And then we've had to get kind of, a little bit skittish. We've been buying on the way down, just nibble, 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 nibble. And some of those things have already been stopped out. We're still in some of them because we've kind of widened our stops a bit. And you can do that when you're in small size, right? That's why size is so important. But now we've had the second leg down. We've had a catch today. We've got a little bit of bullishness working back into the market. You can see the S&P's up 20 basis points, and the NASDAQ is up 22 basis points, and the small cap index is flat. Bitcoin and Ether are just no-go zones. I did try to do a little day trade in Bitcoin today with a tight stop, and it got stopped out within about 20 minutes. So, I'm not the only guy out there that's trying to catch the inevitable bounce in both of those names, but for longer-term swing trades, they are totally off the map. All right, and I'm going to stick with that until I see evidence otherwise. So, a quick look at the NASDAQ. It's pretty much the same thing. However, the drops haven't been quite as sharp, and we do have the ABC pullback. That's nice. We've got a lower low relative to the first wave down, and that's this ABC pullback. When you get a catch and you get some really good volume coming in, which is what we have today, good high volume today, that usually signals an intermediate bottom. And I'm going to hold to that unless we get something unexpected. And as always happens in the market, there's always the potential for something unexpected that you didn't see, both on the positive side, bullish side, and the bearish side. Okay, so ABC pullback, that's good. Now this low right here that we're printing today, yesterday and today, this low is a higher low than this one back here, which is a higher low than this one and this one and this one. Now, if we go down to our indicators, I should have the RSI on here, which I don't. I don't want to take the time to put that on and fiddle with it. We have the MACD indicator, which is typically a good momentum indicator. It's a little bit on the lagging side, as they all are, but this one lags a little bit more than most. And then I have the cycles down here, and I'm not going to worry about the cycles at all. But if we put a line underneath some of these uh, pivot lows, right, on the price chart, we kind of line them up with the lows on the MACD. Here we go. So we can see that this set of price lows, which are slightly higher than the previous one, coincide with a lower low on MACD. Now, I explained in the room this morning that this is inverse divergence, and it is bullish. It's actually bullish. You might think, oh, the indicator is leading the price lower. No, it's the other way around. Price is actually printing a higher low, but the indicator has reached down to even more oversold levels, and that's usually where you get some of your best runs higher. So if you had bought either of these two lows down here in the pink zone, on the fact that the MACD was lower than the previous price low, you would have had a really nice return. If you had watched this is the big Trump tweet on China tariffs, slammed all the way down, took out several weeks of highs in a day, and coincided with, it's a higher price low, but coincided eventually a few days later with a lower, is it lower? No, I'm sorry, that's not a lower one. That is a higher, it's a higher one. Okay, so ignore that one. But let's look at the one that was just printed. Higher price low slightly to the previous pivot low, but the MACD is a lot lower. I mean, this MACD, I think you have to go back. Yeah, it did print a lower low down in the April lows, right down here in the major tariff panic that would hit the market for about 6 weeks and was just ugly and awful. And we actually made money during that time, if you can believe it. We were short a lot of things, and we were in cash for a lot of the time, and we were in some safe havens, and we did find that some of the things like metals and other things that were rate sensitive were doing pretty well. But yeah, anyway, so MACD is at the lowest level since the April crash, but price is actually printing a higher low. So that's inverse divergence. That tends to be bullish, and I'm going to stick with that because I like that theory. That, by the way, was taught to me by the very first mentor I had in the trading world. I won't give you his name because he got indicted for some tax evasion or something. He ended up getting into trouble, but he was a very good teacher, and he kind of took me under his wing, and he taught me his main bread and butter system, which was a basic pullback system. Higher price lows in an uptrend, a confirmed uptrend, higher price lows with lower indicator lows. He liked the stochastics for that, but you could do it on RSI and other things. And boy, you can make a good living just trading that signal alone. We're getting it now, but I have to say that it will not confirm until we get a good, healthy green close today, and then we get some follow through tomorrow. Right. So today's not necessarily the day, although we did do some buying in the QQQ. But if you are looking to take the highest probability trade and the least amount of risk, then you got to wait until we get to tomorrow. Now, I would normally wait until tomorrow, but with NVIDIA on the horizon and with so much expectation, and they're very likely to do very, very well, I give it about a 65% chance of a gap up in the morning. And it could be a massive gap up because of all this negativity that has seen the market fall down so far over the last 3-4 weeks, that we really could get a big up gap in the morning, and then it's off to the races, and we missed out because we were waiting for confirmation. So better to nibble a little bit today, right? Keep your size really small, just as much as you're willing to risk if it just goes totally south. And then we'll see where we go tomorrow. Small caps are getting kind of close to a mean reversion setup. What do I mean by that? Well, there are ways, mathematical ways of measuring how far the price gets away from moving averages. 50 is a good one. The 21 is probably better. And when you get too far away to the north, it tends to slam right back down into it. Too far away to the north, comes right back down. Too far away to the north, comes right back down. And the same is true on the underside of the 21. And I have to say that I think yesterday's low was about as far away from the 21 as you're likely to see in the absence of a bear market. Right, we're still in a bull market. We're still in an uptrending market. The economy is still doing okay. We don't have any confirmed evidence of recession. So to get so far away from the 21 suggests that the next move for the M2K is going to be a bounce back up to the 21. Now, of course, the 21 is going to be falling, and the price, all it has to do is just go sideways in order to meet it eventually, and that could happen. But more often than not, in these mean reversion trades, you get some upside as the falling average comes down and the price begins to go up. Where they meet, that's where you exit. So I think that's a potential trade. I'm not going to take it myself, but I think that is shaping up. So Bitcoin threw me off track when it got to 90,000, held, lots of volume came in, started to bounce. I went for a day trade, and then it was all south from there. And this just totally, I mean, it doesn't look good on the daily chart either. Just this was a little 5-minute setup that I was playing with, and it didn't work, but it's not working on the daily chart either. So just stay out of Bitcoin for now. I do think that there is probably soon a dead cat bounce in Bitcoin, maybe enough to get up to about 100,000 again, and then it's another leg lower. And I really think the same for Ether. This is the let me redraw that pattern that I had on Bitcoin, because I think it's probably even worse now. This is the sorry. Let me make these parallel. That's pretty good. Okay, so I'm not quite sure where to put that support line, but we'll just put it right there, which means that the next move is down until it hits that support line, and then it will do a weak rally up into the resistance RTL, and then another leg right back down again. So Ether's looking bad, worse than Bitcoin. I'm sorry, Bitcoin looks really bad. Ether might be a little bit better. Maybe not. But anyway, this is the path of least resistance. Down to the support, weak rally up to the resistance, back down sharply to the support. So a guy that's in my pro trading group, he has targets for both Bitcoin and Ether, and he's been short since mid-October, and he's looking for 75,000 Bitcoin and 1,500 on Ether, and I would not be surprised to see those two hit. So gold, we've been trying to short gold. It got off to a nice start, and we moved up our stop on GLL, and I got it a little too tight because I think we got out of it today on that little rally. But I really do think that the next move is down. Silver probably has a little bit more upside. It looks pretty good today. It was looking a lot better earlier, like most things. But again, I think this is just the beginning of a more prolonged downtrend. You've got the double top down here, and with gold, you have a much lower high. And usually those take a while to play out. So we'll see. I want to get long both of them again, but not here. We're going to wait on those. Okay, let me show you some on my greens list, and that's about all we'll have time for. We've got 10 minutes left. I really need to get back into the room. So now some of these are they're just on the list because I think they are potentially setting up for a long, or I really like the story of the fundamentals, or everybody in my pro trading group has been buying shares of these. So I just have them on the list so I can at least keep an eye on them. But not everything is set up to go. Iran is certainly not set up to go. And in fact, it's printing today a bear flag, which disqualifies it. So I take it off the greens list. MNMD is it's a medical tech firm, and that's a very good space to be in. It is an uptrend. We're down here below the 50, not a good place. It was starting to reverse in the pink zone yesterday. Nice looking day, but today not following through. So it's off the list. I had a couple of energy plays on here, and the sector itself looks pretty good. In fact, I wouldn't be surprised if we're long XLE or Gush, Gush shares and XLE calls before the day is done, because this is one of the sectors I think is uh, is gearing up for a pretty good breakout move. Right, this is a nice looking uptrend, pull back into the 50, bounce back up. You can see very strong resistance line there. I'm not sure it owes earnings, a drop down on earnings, but the fact that it recovered that and then some very quickly is a very good sign. And now it's doing a little bit of a cup and handle ishy thing. I'm not sure that's really what's going on there, but it is gearing up against that resistance line, and it's bouncing off the 50 today, and that looks pretty good, all things considered in this market. We're not seeing too many stocks up near 52-week highs. MU has earnings in about 3 weeks. It will be influenced by NVIDIA tonight, but I like this setup. One of the strongest blue chip tech stocks out there. It's getting all kinds of good publicity. It's an old tech term that is now gone into the AI space with the storage, their best of breed storage stuff. And down here to the 21, kind of giving a little bit of a spinning top, which is usually an end to the trend. And but I would want to see that start going back up to the upside before I would buy. Here is a XLE. I mentioned that before. Got up to where MPC got up to, pulled back to the 21. And I like the fact that on a market day yesterday, which was falling sharply, this guy was going north, right? The energy stocks were going north. A little bit of a drop down today, catch at the 21 after testing the 50, green bar, good volume coming in. Everything looks pretty good here. Not great, not perfect, and you're not finding any kind of perfect chart out there with a few exceptions. And this might be one of them, actually. This is the solar index. And look at this uptrend, beautiful. When the 21 is above the 50 and they're both rising consistently and price stays either between them or above the 21 and rarely gets at to or below the 50, that's a very good looking uptrend. Very healthy, very strong, every dip getting bought, good volume coming in. Look at these big green bars, well over average, and there are a lot of them. So that's a sign of accumulation. Came down to the pink zone, rallied back up, came down for a couple of days with the market, and now holding steady as on an inside day bar above the 50 in the pink zone. I kind of like this. I want to drill down into the sector and see if we can find something that looks good there. I know that FSLR, SEDG, CSIQ have all been getting good call flow, and maybe that's where we need to go. WMB is an energy play, and I don't really like what it's doing this week, so that's off the list. XLU is a safe haven, and where are we at here? Come on. This is the pattern. I need to expand it a little bit. Not looking very good today. It's not acting as a safe haven today, but it is a great sector, right? There's some really good, like VRT and CEG and some of the other nuclear plays are all in this index now, and that gives it a little more juice than it used to have. And you can leverage this with UTSL. Not a buy today, so I want to see this turned around and give me a green bar. Maybe it gets down to test the lows from Friday of last week. I like snow, and this is a great looking chart. Again, strong uptrend. I tagged the 50 the other day, holding above it so far today, not even down into the pink zone. This is really strong, and it's probably going to stay strong into earnings, but I'm not sure I would hold over earnings. It did really well last time, and it did really well last time, and then it didn't do very well the time after that. So, it's a coin flip, but I'm long snow for the long haul. I've been long about 3 years now. So I like the company a lot, and I don't see any reason I need to cut that one loose. So I can recommend this, and I do like it as a swing trade as well, where it is right here. WDC got all kinds of news out a little bit ago on people interested in buying it, and it shot way up, and that's come right back down, but this is a strong chart. Look how far away the 21 is from the 50. The 50 is above the 200. You don't see this very often after the last month that we've had, where you've got I don't know if this is exactly a tech stock, but it's in kind of the techie space, and it is up here at the 21, not even below it, and that looks really good. This is one of those charts I was saying that I said there aren't many good charts out there. There's a lot of kind of iffy or moving towards being good or kind of semi good. This one is just good, 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 right? This one is just really, really good. We should be long this one. I don't know why we're not, but we'll hang on to that thought. SNDK is giving a nice little bull flag here. Looks very, very strong. Really good volume coming in after earnings. That's always a good sign. And yeah, this one also very good. Can be bought right here. Datadog is this is a power gap. So this is one of my favorite setups. We were talking about this in the room yesterday. And there's your gap all the way. This is an earnings gap, right? Those are the best. A biotech can come out and do a power gap on a FDA approval, but most companies that do the power gap on earnings, and when they do, that's a very good sign as long as the gap stays open. If the price goes up and then starts coming down into that gap, it can get maybe a third of the way into the gap, but any more than that, it's no longer a power gap and no longer has the kind of power that this setup has. So this is perfect, right? Power gap up, pullback, kind of soft pullback, at least low volume into the rising 21. It's a hold today, an inside day bar, and that to me looks like it's ready to keep going higher. I like that one a lot. Qualcomm, we're past earnings. This one will move on NVIDIA, but it is a 3-bar reversal at the pink zone, uptrend. TSM looks really good. Nice little base building here in the pink zone. It's a little bit weaker than Qualcomm, but in the market that we have, not too bad. Apple is just really good. I mean, it's just outperforming, right? This is about as soft a pullback as you can get. And a little rounded bottom, fake breakout, down to the 21. Big, strong day today. It's a boring stock these days, but you know what? Boring is pretty good in the market. I do like the setup of the semiconductors overall. You've got the stacked MAs. You've got a hold and a reversal today at the pink zone right at the bottom edge. And that's not bad. It's ready to go, but it's going to need NVIDIA to do its thing. We're long crowd in the live trading room, and this has just been a great chart. It's been a great trade for us. I'm also long crowd long-term in my family fund, and I really like the company. It's got some earnings coming up, but yeah, I think we'll probably hold over earnings since that's a long-term position for us. Just a few more. NVIDIA looks great heading into earnings, a lot like SMH. AVGO, another semiconductor, doing well. And it is even today breaking out. I hate it when it does that. It is breaking out of this little pullback, right, today. And it got an alpha gold alert on the options flow. VRT, one of those energy plays I was talking about, nice pullback into the rising 50, right? Looks good. Tried to break out today, didn't quite do it, but the rest of the market's pulling back in. Not sure I would ever buy Wayfair just because I don't understand how they're making money these days, but it's a really awesome chart. Really, really awesome chart. Here's your power gap. Here's your test. We got down into the gap a little bit, maybe a little bit too much. Don't want to see that, but I don't know what's going on with my trading. So, but it is a reversal bar today, and this looks like it wants to get back up there, up above 115 or so. You know, we are in ARQT in the live trading room. We bought shares down here around, I don't know what it was, 24 something. And it's just been up, 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 up. We keep moving up our stop, and we're getting very close to our target, which is 30. And that's just a beautiful trade. Now, why did we get into this one? Well, first of all, I already know that the biotech sector is worth getting into because it's been very strong. And when you start to see a sector outperform, it had been a lagging sector, you know, most of last year and some of this year. And then when it starts to outperform and get ahead of the tech sector even, and ahead of other sectors that had been strong, you pay attention to that, start drilling down into the stocks. This one was up on earnings and an FDA approval, power gap, pullback test, and then we bought on the reversal. So it was already a pretty big red stick when we bought it. That usually goes against my rule, but this one worked out quite nicely. Okay, AMLX is also a biotech, same space. Good looking chart right here. I did bring this to the room's attention when it was around 1340 or so, because it was then in breakout mode with this rounded bottom. So power gap up, remember that. Rounded bottom, then a breakout. Remember that, that's bullish. And then higher price lows, with lower indicator lows, remember that as a bullish setup. That's your trader training for the day. Guys, I better let you go. God bless. Have a great rest of the day. I'll see you back in the room as soon as I finish producing the video here, and we'll go from there. We've got 90 minutes of trading left. God bless. Bye for now.